Let's talk first, before we get to the Citi meeting, about the general bank earnings season. We saw nice results from most of the banks, and yet the market just kind of sighed.
Well, yeah, most banks exceeded expectations. We increased our future estimates for most of the large banks, and you saw the three C's. Cost control was great. Revenues are far outpacing growth in expenses. You see credit quality still fantastic. And capital is getting returned. So it's all working. I think the stock market has been wrong over the past couple weeks. The earnings results validate our bullish theme on the banks. And we think, in the end, earnings will rule. So over the next 1 to 3 year, earnings will continue to increase and the stock prices will work.
In fact, what you say in your note, I think, is very apt. You say the meal seems fine, but investors may be waiting for dessert. What would dessert be in the case of a JPM or a Goldman Sachs?
Well, I think, why did the stocks not react more positively? I mean, you had a fantastic meal. You know, it's like a big veal chop, all right? You had, very strong balance sheets, growth in earnings, future expectations, good. But I think investors were like, where's my dessert? All right, tax cuts were supposed to increase loan growth. Higher rates were supposed to increase margins. Market volatility was supposed to increase trading. And you didn't see that increase in loans and margins and trading as much as people had expected. So you're left saying, where's my dessert? Well, newsflash, we just had the tax cuts a few months ago. It takes a while. So we still think you'll get a dessert in the future. And even if you don't, our bullish thesis is not predicated on getting any kind of great acceleration. We think the main course is just fine.
Now, one of the things that's most watched in earnings season when it comes to the banks is Mike Mayo's question, right? You always have a particular question, at the annual meeting, on analyst calls, when you can get on them and so forth. What are you going to be asking at the Citi annual meeting tomorrow?
So as soon as I leave here, Vonnie, I go catch a plane to Chicago, where Citigroup is holding its annual meeting, and I've attended for most of the last 6 years. But there's one burning question at Citigroup tomorrow, and that is, who's going to replace the chairman of Citigroup? The chairman has mandatory retirement at the end of this year. So one option is you promote the CEO, Mike Corbett, to the chairman's role. Another option is you get another chairman, another set of eyes, to look over the CEO and the management team. And so I'm interested to see what kind of answer they'll have. And look at the talent that's out there. How about Gary Cohn? Why not appoint Gary Cohn to be chairman of Citigroup? I mean, he certainly has expertise at a global firm, expertise in terms of the capital markets. Citi's in over 100 countries. Now, let me say, we are bullish on Citigroup. We think Citigroup stock can double over the next 4 to 5 years. Their returns are certainly improving. The issue is they still have worst-in-class returns, worst-in-class stock market valuation. So the stock market's saying something, and what we think they're saying is a little bit more intensity, another view on the company on how to manage and perhaps even restructure the firm.
And just before Mark jumps in, Goldman Sachs president who just retired, Harvey Schwartz, might be another candidate, right, Mike?
What we're hearing back from investors, and we published the questions we're going to ask, is, yeah, we'd like to have another set of eyes on top of Citigroup. We'd like more intensity, and another perspective sometimes can help. So Harvey Schwartz, especially Gary Cohn, though, that's been received pretty favorably in our discussions.
Yeah, Mike, what about, on the Gary Cohn front, before I get to the performance metrics, do you think he'd fancy it?
We have not spoken with him. I have no indication from him. But I think it's the duty of a board to consider all the talent that's out there when you're looking to fill a position. So we'd be shocked if Citigroup would at least not consider Gary Cohn, make outreaches to him, among others. And at the end of the day, they might decide to promote the CEO, Mike Corbett. They might not, but you have to do your homework.
Yeah. What about restructuring, Mike? What would you like to see? You say in your notes, restructuring. Why not more? What are you thinking about?
Well, last year's annual report, Citigroup said our restructuring is over. How dare you say your restructuring's over when you have worst-in-class returns, worst-in-class stock market valuation, and the stock price is down, 80% from before the financial crisis. By the way, it was just the 20-year anniversary of the creation of Citigroup in its current form, and the stock is a woeful underperformer over such a long time frame. So we think the capital markets business is catching more of its stride. We think consumer has more of a way to go. And the consumer footprint, it's global, but it's Mexico, Asia, and the United States. So why that geographic footprint? Why not consider selling off Mexico, selling off pieces of Asia? Why do you consider your restructuring done when you have worst-in-class returns? So we'd like for them to at least keep the options open. Tell us about some of the assets that could be on the chopping block. If they don't, go ahead and get the desired returns.
Mike, do you think Citigroup's devoting enough to technology?
You know, our theme is Goliath is winning. So we do think David is losing to Goliath in the technology battle. So whether it's, any of the large banks versus the smaller banks, we think the large banks are winning. I mean, just look at, I'll shift gears for a second, but JP Morgan spends $11 billion a year on technology. Once you get to the 30th largest bank, you're spending like, 1/100th of that amount. So I think Citigroup does have an edge versus many of the other players.
You've been going to these annual meetings, and not just for Citi, but for a lot of the banks for a long time. How have things changed over the years? Has stock ownership become so concentrated that these annual meetings are, almost worthless?
So what are you, drinking Jamie Dimon's Kool-Aid? Jamie Dimon said annual meetings are a waste of time because special interest groups, hijack the agenda. And I'd say Jamie Dimon...
No, I'm not talking about special interest groups. I'm talking about institutional investors. If you want to call them special interests, then fine.
But no, there is a degree of... I think, Jamie Dimon is, wrong for the right reason. I mean, he's right. There's a lot of the annual meetings that's kind of a waste of time for institutional investors and for me. But I think he's wrong because annual meetings can be structured in a way that's more valuable to institutional shareholders. And for me personally, I'll travel halfway around the world for one morsel of new information that nobody else has, as opposed to listening to the same earnings presentation that hundreds are listening to.
What about board elections, though, Mike? I mean, is there something wrong with the process that doesn't allow for sort of something more, a little democratic maybe, or something more akin to the political system?
Well, that's why I'm going there. I mean, the issue with the financial crisis, we have the 10-year anniversary of the failure of Bear. We'll have the 10-year anniversary of the failure of Lehman coming up in September. A lot of anniversaries here, but the issue is nobody was minding the store. The regulators thought the markets were watching it. The markets thought the regulators were watching it, and nobody was watching it. So if you want a little bit less regulation, and we are having some less regulation, then it's up to the markets, it's up to the institutional investors to step up to the plate and hold managements accountable and make sure they're running their firms for sustainable long-term growth. So that's what we're doing there. And I'm encouraged by the feedback that I've gotten from institutional investors. They say, yeah, Mike, keep doing that. By the way, here's some questions we'd like you to ask. And so... Still a long way to go, but if I'm the only one doing it, I'll keep doing it.